Welcome back to the deep dive. So today we've got something a little different for you.
Yeah, bit of a reality check.
Definitely. Usually, when we talk about companies hitting $1 trillion valuation,
Mhm.
we're talking about silicon chips or AI models.
Right, some massive futuristic tech platform.
Exactly. But today we're looking at two companies that sell bulk toilet paper and rotisserie chickens.
Which is wild to think about.
It really is. We're diving into an investment analysis from late February 2026 involving the absolute titans of retail, Walmart and Costco.
Two very recognizable names.
Right. And look, if you bought these stocks 10 years ago, you are incredibly happy right now.
Oh, absolutely.
But if you're looking at them today, like specifically February 24, 2026, the picture is, well, it's confusing.
Confusing is definitely the right word.
Right.
Because you have these two boring retailers,
Boring in quotes.
right, in quotes, companies we associate with low margins and physical shopping carts. But they're trading at valuations that are usually reserved for high-growth software companies.
And that's exactly our mission for this deep dive. We aren't just comparing prices on milk here.
No, not at all.
We're trying to figure out why the market is treating these brick-and-mortar giants like financial rocket ships. The source material we have is an analysis trying to figure out which one is the better buy right now. But to answer that, we really have to understand how their business models have fundamentally changed.
Yeah, they've evolved. Because if you are just looking at the physical shelves, you are completely missing the actual business.
So let's start with the sheer scale of these businesses. I was reading the tail of the tape section in the analysis, and the numbers for fiscal 2026 are just staggering.
They're massive.
I mean, we throw around the word billions a lot on this show, but this is different.
It really is. Let's look at Walmart first. As of late February 2026, we are talking about a market capitalization of $1 trillion.
1 trillion.
Yeah, and the revenue backs it up entirely. For the fiscal year ending January 2026, they pulled in over $700 billion in sales, which is up nearly 5% year over year. To give you some context for that, $700 billion is larger than the GDP of entire countries, like Belgium or Sweden.
That is insane. So Walmart isn't just a company, it's essentially a sovereign economic entity at this point.
Basically, yeah.
And then you have Costco. Now, in my head, I always group them together as direct peers. They're the big two.
Right, the retail titans.
But purely on the financial footprint, Costco is actually significantly smaller, right?
In terms of raw size, yes. Costco's market cap sits at around $443 billion, and their revenue over the last 4 quarters is over $280 billion.
Okay, so Walmart is roughly 2.5 times the size of Costco.
Right, but, and this is a huge but, Costco punches way above its weight class in terms of efficiency.
Rad. And looking at the stock prices as of February 24th, 2026, you can really see that prestige. Because Walmart is trading around $126. But Costco is hovering right under $1,000, $998.36.
Almost $1,000 for a single share of a warehouse retailer.
It's a huge psychological barrier.
It is. But here is the really critical trend the source points out for both of them. Profits are growing faster than sales.
And that's the anomaly, isn't it? Because usually when a company gets this big, you hit the law of large numbers.
Exactly. Growth is supposed to slow down.
Right. It gets so much harder to move the needle, but they are somehow becoming more profitable as they get bigger.
Which tells us they aren't just selling more stuff. They're changing how they make money entirely.
They're finding new profit centers.
High-margin profit centers that have absolutely nothing to do with the markup on a gallon of milk.
Let's dig into that, starting with Costco, because I think most people know the membership model is their thing.
Right.
But the analysis suggests it is performing at a level in 2026 that is, frankly, kind of scary.
It is the ultimate flywheel. We have to remember that Costco's core retail business, so selling the tires and the ketchup,
The actual stuff in the store.
yeah, that's essentially designed to just break even. They run on razor-thin margins. They cap markups at like 14 or 15%.
Wow.
Compare that to a typical department store that might mark things up 50 or even 100%.
So the profit isn't in the merchandise at all. The merchandise is just the bait.
Precisely. The real product is the membership card. And the fiscal Q1 2026 numbers show just how potent that product is. Overall, memberships are up 5% to 146 million people.
But it's not just the sheer volume of people joining, is it? It's the kind of membership they're buying.
That is the key metric to look at, executive memberships.
That's the higher tier one, right?
Right, the one that costs more but gives you the 2% cash back, Those are up 9%.
Ah,
That mix shift is massive for them. Because of that upgrade cycle, their total membership fee income jumped 14%.
14% growth in pure profit because there is zero cost of goods sold on a membership fee.
Exactly.
It's just pure cash,
Yeah.
straight to the bottom line.
Which is why their net income was up 11% in Q1. For a mature physical retailer to grow net income by double digits is incredibly impressive.
That's a huge bottom line boost. But there's a psychological layer here too, right? Because the better the deals are inside the store, the more people are going to join.
It's a beautiful self-reinforcing loop. The more members they have, the more buying power they have to lower prices even further, which then gets them more members.
So Costco clearly wins on the club model. That is their absolute secret sauce. But Walmart doesn't really have that.
Not to the same degree now.
I mean, they have Walmart Plus, but let's be real, it doesn't have that same cult-like following that Costco does.
True.
So how is Walmart managing to keep up? How are they growing profits faster than sales? The source refers to this as a massive digital drive.
It is a complete transformation. If Costco is about physical access, Walmart is becoming entirely about digital attention.
Okay, break that down for me, because when I think of Walmart Digital, I mostly just think of ordering groceries for curbside pickup.
And that is a big part of it. Their global e-commerce sales hit a record high. 23% of their total sales in fiscal 2026 were e-commerce.
Almost a quarter of their sales.
Yeah, so nearly a quarter of Walmart is functioning like Amazon now. But the real story, the part that actually explains the massive profit boost, is the marketplace dynamic and the advertising revolution.
Okay, marketplace meaning third-party sellers. Other people selling on Walmart.com.
Yes. Just like Amazon, Walmart lets other companies use their platform to sell goods. Walmart takes a cut of the transaction.
But they don't actually buy the inventory.
Exactly. They don't buy it, they don't store it, and they don't take the risk if it doesn't sell. So the profit margins on those third-party sales are infinitely higher than if Walmart bought the item wholesale themselves.
It makes total sense. High margin, low risk. But the source really focuses on this advertising aspect. They highlight the acquisition of Vizio.
This is the real nugget for anyone listening right now. Walmart is turning into an advertising giant, and Vizio is the key.
Why did a grocery and retail store buy a TV manufacturer?
Connected TV advertising. By owning Vizio, Walmart literally owns the screen in your living room.
Okay.
And they have access to what we call first-party data. They know what you watch. They know what ads you see on that Vizio TV.
And because they are Walmart, they also know exactly what I buy in the store.
Bingo. They know your purchase history. This is incredibly valuable to brands.
Explain why that first-party data is so valuable to a brand.
Think about it from the brand's perspective. If a laundry detergent company runs an ad on a regular TV channel, it's mostly a guessing game. Did that ad actually make you buy the detergent? Who knows?
Right, it's hard to track.
But if they run that ad on a Vizio TV, and then you use your credit card or your Walmart app to buy that exact detergent at a Walmart store 2 days later.
Oh, wow. Walmart can connect the dots.
They can prove with hard data that the ad worked. In a world where privacy laws make it really hard to track people online, this closed-loop data is just liquid gold.
So Walmart isn't just selling shelf space to these brands anymore. They're selling targeted ads with guaranteed proof of purchase.
Exactly. And the margins on digital ads are huge. So this combination of the e-commerce marketplace and this new advertising machine is exactly why Walmart's profits are totally outpacing their sales growth.
That is fascinating. So you have Costco monetizing loyalty through the membership fee, and you have Walmart monetizing data through this ad platform.
Right. Both of them are finding incredible bottom line boosts.
But this is a showdown. The source analysis actually asks the ultimate question. If both of these businesses are doing so great, which stock is the better buy right now?
And this is where we have to talk about valuation, which is the expensive problem.
Yeah, we mentioned earlier that they are trading like tech companies. The source brings up this concept of forward P/E, forward price to earnings.
Right. Both of these stocks are trading at over 40 times forward earnings.
Which means what exactly for you as an investor?
It means you are paying a massive premium for future growth. Think of it like this. You are paying $40 today for every $1 of profit the company is expected to make next year.
That sounds high for a grocery store.
It is very high. Historically, boring retail trades way lower than that. When you pay 40 times earnings, you are basically assuming these companies will execute flawlessly for years. Any stumble, and the stock could drop significantly.
So given that high price tag for both of them, who does the source actually pick as the winner?
The source picks Walmart.
Even with Costco's amazing membership model.
Yeah, it really comes down to two specific reasons. First is the valuation gap. Costco is meaningfully higher in terms of valuation. It's just more expensive than Walmart right now, which limits its potential upside.
At basically $1,000 a share, it's priced for absolute perfection.
Exactly. And the second reason is dividends.
Okay.
Walmart's dividend yield is 0.74%. Costco's is 0.52%.
Both pretty small numbers.
Small, yes. But Walmart's is better. It provides just a little extra boost, a bit more of a cushion for investors.
So to summarize the source's verdict here, Costco is an incredibly strong business, maybe one of the best models ever. But Walmart just offers a better return on investment at these current prices in late February 2026.
That is their conclusion, yes. Walmart is the better value play.
But wait, there is a, wait a minute, moment in this source material.
There's a twist.
Segment 5, the wider view. Even though this specific analysis favored Walmart over Costco, the broader team at the Motley Fool Stock Advisor,
Right, the team that published this.
they didn't even put Walmart in their top 10 stocks to buy now list.
Which tells you a lot about investment strategy.
Right. If Walmart is doing so well, why wouldn't it be in the top 10?
Because despite Walmart's strength, it is still a mature trillion-dollar company. Some analysts are looking for monster returns. They want high-growth opportunities.
The source mentions historical examples like Nvidia, Netflix, and Tesla. I mean, they point out Tesla's up over 18,000% since they recommended it.
Right. 18,000%. That is life-changing money. Or they mention CrowdStrike. They're looking for 10 baggers, stocks that can multiply your investment by 10 times.
And a trillion-dollar company like Walmart just mathematically cannot grow by 10 times anytime soon.
Exactly. It's a solid giant. Yeah. It's going to protect your money and grow steadily, but it is not a 10-bagger opportunity.
It's a totally different investment strategy. Are you looking for a safe battleship or a high-risk rocket ship?
Precisely. You have to know what game you are playing.
Well, that brings us to the end of our deep dive.
Yeah.
And just to recap for everyone listening, Costco is clearly winning the loyalty game with their 146 million members.
Unbelievable numbers.
And Walmart is completely reinventing itself as a digital ad powerhouse with the Vizio data. But specifically, as of February 2026, Walmart just looks like the better value play between the two.
That's the main takeaway from the analysis.
But before we go, I want to leave you with a final thought, something we touched on earlier that kind of blew my mind.
The evolution of retail.
Yeah. We used to think of these stores as just places to buy physical goods. I walk in, I buy a chicken, I leave.
A simple transaction.
Right. But now, their real value isn't the physical good at all. Costco's value is in access. You pay a fee just for the right to shop there.
And Walmart's value is in attention.
Uh-huh.
Your purchase data feeds their advertising ecosystem.
Exactly. So it really makes you wonder, when you walk into one of these massive stores today, are you actually a customer shopping for products? Or are you just a data point in their ecosystem?
It's a provocative thought. You're trading your privacy and your membership fees for access to cheap goods.
We are the product.
In many ways, yes.
Well, it's something for you to mull over next time you're buying a massive pack of paper towels. Thank you so much for joining us on this deep dive.
Thanks for listening.
We will see you next time.